Welcome to Bar Charts Market on Close. I'm your host, John Rowland, Bar Chart Senior Market Strategist. And on today's show, channeling through the path of least resistance, power of the people, and when is a silver cup worth its weight in gold? Did somebody forget to ask Warren to come along with us? And plus, a debate, which would you rather own, Tesla or Alphabet? And all of your questions. And to help me out with today's show is my co-host, our Mr. X, Twitter Tom. Hello, Thomas.
Hello, John. How are you?
It's Friday. I'm ready for the weekend. I don't know about you, buddy.
Same. TGIF, huh?
I hear you.
Been a long week, but fortunately, we've got a lot of fun topics to talk about, John. But before we get into those, just a quick reminder for everyone watching directly on our website. If you want to ask us a question, just click Ask a Question at the top right. You'll see it in the orange color. If you're watching on YouTube or any other social channel, guys, go ahead and ask those questions directly in the chat or in the comments section. And then John and I will get to as many as possible. All right, John, so let's lead off with where we normally lead off, which is a broad look at stocks. John, last week, historically, as we've pointed out, is the strongest week of the year for the stock market. But honestly, John, it doesn't feel like the market missed a beat at all this week because we just keep hitting new highs. So I think the question on everybody's mind, John, is, are we just going to keep going higher forever?
Well, I don't know what to say. I mean, this is kind of like a broken record, and it certainly feels like to me like, it's like watching paint dry. Right? It's kind of boring, but I've been saying for weeks now that the strongest of bull markets never convince you to buy them. They just staircase up. So, let's look at our S&P here chart. So again, it's kind of just, it's just creeping along. So, the path of least resistance inside of this channel, I don't see anything changing in the near term. And if I was looking for some reason to say, hey, maybe the market might go lower, maybe we could see the market pull back to, the bottom end of the channel. I kind of look at things that like, a change in trend sometimes would come, like old school I learned was, if you meant a new 4-week low. And so a new 4-week low would put us around 61.75. This is a weekly chart. I'm going to change it back to the daily chart. And you can see that kind of puts us near the bottom of this channel. So we really got to break out of this channel. And then even if that occurred, I mean, the market is probably overdue for a little bit of a 5% correction. And that 5% correction would put us just above 6,000, which would put us right on, near previous all-time highs and the 50-day moving average. So, Thomas, I just think it's more the same until we get later in the year.
So, John, there's a famous saying that the stock market doesn't need a reason to go up. It needs a reason to go down. So my question is, we've kind of talked about things in the charts before and possibly waning momentum. A lot of other people have talked about it too, but stocks keep marching higher. So are there any risks out there, John, that you have some sort of conviction in that could maybe lead the market lower?
Yeah, I mean, they're not keeping me up at night, but I think tariffs and trade tensions, what are the tariffs going to have an effect on our corporations? GE in their notes this week said that they spent $1 billion in the second quarter on tariffs. And so that is an added cost to them, and that cost is going to affect their margins. So, I want to see what happens with that. The other thing is that seasonality. We've looked at seasonality before, and we said that September is one of those volatility months. So I really do believe that something will happen in September. And then the independence of the Fed. Now, I think we all can argue or agree that, maybe short-term interest rates are a little bit high, especially compared to other countries. But it's this independence of the Fed, right? If Powell is forced out of the market, forced out of his job, who the perception of who controls interest rates. I mean, if the Fed lowers rates on a very, quarter basis point, I think that would be good for the market. But if Powell gets pushed out and they start lowering interest rates, I think then the long end of the bond will probably go up, and then a long end interest rates is not good for the stock market. But the one fear that does keep me up at night, Thomas, is this abundance of speculation.
Yeah, John, if I can sort of describe the current market environment with a single word, it would be euphoria. And I saw this visual from Barclays, John. So it's the Barclays Euphoria Meter. All these banks, they've got their own indicators. They've got literally a name in a chart for everything. But this is the Euphoria Meter. It shows that investor euphoria, John, has jumped to its highest level this year. Now, there's a lot of things we can point to demonstrate that level of euphoria, but I want to hone in on possibly, and I want to stress possibly, the return of meme season. Now, GameStop and AMC are, of course, the most famous meme stocks, but this week, John, we saw another one go crazy, and that, of course, is Opendoor. Now, we got people out there, John, screaming, well, thanks a lot, guys. Why couldn't you tell me before Opendoor went up? So this is where you come in, John. Is there anything out there on your radar that could be Opendoor Part 2?
Well, the meme stocks is definitely part of this exuberance or abundance of speculation. But, I heard a rumor, or read in an article that I think it was EMJ Capital, the gentleman who kind of started this whole meme thing, that he found the stock by using AI. He basically asked AI, which is going to be the next meme stock, and he used some prompts for instance, like downtrodden or most misunderstood or hated stocks, market cap around 500 million, and a possible turnaround story. So what I did was, Thomas, is I went to our own website. Yeah, there you go. And here's our investing page. And, look at our investment you go down this list here. A lot of these all really have a lot of bullish or positive notes behind them. But if you look at here very carefully, there's one that to me stands out. It says, hey, this is a misunderstood sector. It's it's downtrodden, and that is cannabis stocks. So I think there could be a story in the cannabis. And when we were doing our production meeting, what did you find out, Thomas?
Yeah. So, and John, do you want to bring up that cannabis page on the website?
Yeah, sure. Here you go.
So, John, as we were going through our planning session, I went to ChatGPT, right? If it's good enough for EMJ Capital, well, it's good enough for us as well. And I was just curious, John, could ChatGPT identify the next one? So I took your idea and I literally asked, you can see the question. I asked ChatGPT, can cannabis stocks be the next meme stock? And John, here is the one it identified: Tilray Brands, TLRY. John, what do you think? ChatGPT and John Rowland on the same team sounds powerful.
Yeah, well, let me first of all start off here, because this is really kind of bizarre. What happened here was, first of all, full disclosure, I own this stock, but to me it's a dog with fleas. It's a stock that I've had for a long period of times, and I just wrote it off, but I just don't feel like I want to sell it. But yeah, this makes sense to me, because if you look at, for instance, a chart of Tilray. So let me go to chart of Tilray. This is a 1-year chart. You can see it's just fallen on bed. But if we look at this from, even like, a 3-year chart, you talk about, a horrible looking chart. I mean, this stock has gone, just from $60, $70 down to like 60 cents. So this is definitely a downtrodden stock. The other thing that, I think about this in terms of a turnaround, right? Or, what could make this stock a good possibility is, look at the stock here. Its market capital is $700 million. Its annual sales is almost close to $800 million. Now, it has an earnings coming up on Monday, which could be a catalyst for something to happen. The other thing that you need for a meme stock is you got to have a healthy options market. And why do I say that? Well, it's because you need to be able to have, you're going to buy a lot of these out of the money calls that creates gamma, which makes the market maker have to buy the underlying. That's this kind of this gamma squeeze is part of this idea of what makes a meme stock. And so you can see here for under Tilray, it has a good daily volume, about 50,000 contracts, and has almost 80,000 open interest. One of the things you can do when you're looking at meme stocks is you tell if you're like in the early stages or the latter stages, is look where your implied volatility rank is. And, look at implied volatility, it's 169, but if your implied volatility gets up to like 99 or 98, 99, 100 rank, then you're probably at the end of a move. But as it's rising, right, that move can continue. So this one has been rising. It was only like in the 50s a couple of days ago. I think it was 60 yesterday, and today here it is 70. So all the components are in right. Now, I want to be very clear here. I think we should do a social experiment. I'm not recommending buying this. I don't want you guys to go out there and do the things that I've done in this particular stock. I'm telling you got 100% guarantee you're probably going to lose money on this. But maybe if we go into social media and start talking about this stock, because AI generates all of its sources, all of its information through AI, could we make this into a meme stock? And I think that is a possibility. But let's just look at options here. And this is what I was talking about. Hang on, I gotta go up a little higher. Come on, John, get your act together. There we go. Option pricing. So let's look at options that are going to expire after next week's earnings. So that'd be the first, this next Friday. A $1.50 call only is going to cost you about 3 cents. A $2 call, which is the 52-week high for this, is only going to cost you about 2 cents. So there's not a lot of risk to the downside. But look at call put ratios here. And so there might be something going on here. And I look at this in terms of overall. First of all, look at our put call ratio. So in volume, it's at 0.08. I mean, that is almost as low as you can get. And if you look at open interest, it's 0.1%. In other words, just look at that 7-to-1 calls to puts. Now you do see that in this strike, there has been a lot of volume, a lot of call volume, and there is a lot of call open interest. But look out to January of next year. You already have almost 350,000 calls in this one. So I think there's the catalyst. I think the pieces are there. Again, I'm not recommending this. I'm just saying that, hey, maybe if we can get this out on social media, we could turn this into a meme stock. And again, understand that I will benefit from something happening with this particular stock. But let me give you the meme reasoning. The turnaround reasoning is, first of all, this company has generates income in 7 different countries around the world. In the U.S., they've been quietly buying up breweries. Now, I challenge you to go into a brewery and not find a cannabis-infused beverage. And that segment of the cannabis market is one of the fastest growing segments. So I think there's a lot of things that are good for this stock in terms of that turnaround, the options, the gamma potential, the catalyst. Just, can we get it out there on social media?
Well, with as many people watching this show now, John, it's very possible that this could be the impetus for the move. So congrats, John, on that one.
We need to get, what's the guy's name? The GameStop guy?
Ryan Cohen, I think.
Yeah, but what was it he called himself? I get. He had like a screen name or something.
That's the guy from the Dumb Money movie.
Yeah.
Oh yeah. The cat guy, I think.
I can't think of his name. Anybody remember what his name is? Tilray. I see a couple of people saying Tilray. All right. Yeah. Again, this is more tongue in cheek and fun, but I'm just going to kind of show you some of the things you could look for potential meme stocks.
All right, John. If you ask a comedian what's the most important thing to them, they would say timing. Well, timing is equally important for trading. We talk about all different time frames, right? Tick, minute, hourly, daily, weekly, monthly. But it's not often we talk about a pattern 45 years in the making. John, I haven't even been alive for 45 years, so it's a little hard for me to comprehend, but silver bulls have been telling us for decades that their time was coming, and perhaps it finally has. John, I present to you the 45-year cup and handle uber bullish formation for silver. Now, John, this is a little bit tongue-in-cheek, guys, so don't hold me strictly to it. But, John, to me, this looks like a cup and handle. How do you feel about this, and are you feeling as bullish about silver as a lot of other people are?
Well, let's go through it. First of all, you want to know how old I am? I worked in the silver pits in the 1980s, so that's how long I've been around. But look, we did a webinar this week about chart patterns, and I can see kind of how you're looking at this. That this might be a cup and handle. But really, you got to look at these two tops here. And let me go to my chart here for a second. And let's make this nice and big so we can see it. So you got to talk about the lid, right? That's really the cup. So this would be your cup. Now, your handle has to come up to the lid as well. So maybe we're on our way up there. I would argue that, maybe this is the cup and handle that started back in around 2012 to 2020. That's still an 8-year cup. And then this could be the handle. But I think if we looked at this more in terms of chart patterns, and this is some of the chart patterns we actually talked about in the webinar on Wednesday, to me, this looks like an inverted head and shoulders. And then we have a downsloping neckline, which we've now broken out of. And you measure that. So we're at the peak or projection of that potential top for that. But listen, I don't dispute that silver is going higher, especially because when we think about what's been happening with gold. So, I've showed you guys this chart before in the past, and this is the gold to silver ratio. And you can see here, again, we're looking over a long period of time that, for about, I would say a good decade, we've been kind of stuck in this range between 75 and 90. And we've had a couple spikes. We had a spike during the COVID and just recently this year when we had Liberation Day, where the value of gold spiked a ratio much greater than silver. But you can see that we're falling back into that range. So let's go to a chart of gold. And if I look at gold, I say, okay, well, all-time highs is 35.39, but the highest close it's had has been 34.50. So if I did a gold silver ratio, let's go back to this. And I did a gold silver ratio at 3,450. And I say that gold silver is going to go back to 75, all things being equal. Then silver could go to $46. That's getting closer to that lid. If we go to the bottom of this gold silver ratio, where we go back to maybe more of a historical mean of 65 to 1, that would be $53. That would be a new all-time high for silver. And then again, I said to you that I worked in the silver pits back in the early 80s. Back then, we kind of used 50. That was a guideline for us. It was like, 50 was like the number, the magic number, 50 to 1. And so let's take gold all-time highs of 3,539 and we do 50 to 1. Now you're talking about $70 silver. So for my gold and silver bugs out there, especially those who believe in this Thomas's cup and handle, those are some numbers you can look for. Now, the question is, Thomas, it took 45 years to make this cup and handle. How long is it going to take us to get to those all-time highs? Another 3, 4, 5 years? I don't know.
John, I've said this for months. I don't own enough gold and silver. I've been waiting for these pullbacks, that we've talked about potentially coming, and they haven't materialized yet. I'm still hoping I get a chance to load up on some more, but I'm just kind of wondering if the ship has sailed on me.
I don't know. I mean, we talked about gold last week or a couple of weeks ago, where I said you got to be patient. And, when the stock market makes all new time highs, that tends to see gold, trade sideways to maybe a little lower. Now, we haven't really seen the lower numbers that we talked about. We thought maybe down around 31.80. But you can see that we're making new all-time highs again today. And then over the last 3 days, gold has backed off. So I would say be patient, Thomas. I think you will get that opportunity.
All right. John, let's switch gears. We'll talk about one of our favorite guys, legendary investor Warren Buffett, Berkshire Hathaway. Now, I've posted John on our X account multiple times that it just seems like the Buffett premium has disappeared, right? Since Warren announced his retirement, the share price has just drastically underperformed the S&P 500. But John, I think you noticed something interesting on one of your screeners or your scans, which is that a buy signal may have been triggered in Berkshire Hathaway. So maybe tell us a little bit about that.
Yeah, let me pull up my chart here again. Do that for me, Thomas. Would you mind? Thanks. Yeah, so under our investing page, one of the screens that I love is this EMAC buy signal. And if you're not familiar with that, there's a couple of webinars we've done on that one. But if you go into our templates under bar chart templates, you can find the signal here in a template. And basically, it's when the MACD crosses over the MACD signal line that generates a buy signal. So the way I use this is it kind of, what it does is it puts me in the mind and says, hey, I'm going to think about start looking at this stock. Now, personally, I like to find buy signals in the MACD crossovers when the MACD is in the positive. In other words, when it's above the zero line. So yes, it can signal the beginning of an uptrend or the end of a downtrend when it's in the negative, but I really like to see it in the positive. And so I wanted to show you, look at, there's some similarities to this double buy signal that we kind of got back here in 2024, and you can see it kind of here as well. So what I want to see is something similar to that. See a spike in volume. Now we saw a little bit of a spike in volume here, but this was down volume, not a big deal. And then I want to start to see volume rise as our MACD rises. And so, we're starting to see a little bit of volume in this one. We haven't gotten the final numbers for today, but what I would like to see now is, again, remember our things that we've always talked about. Nothing positive happens to a market that is below its 200-day moving average. And you can see we're just on the 200-day moving average. The other thing I want to start seeing is, this is a comparative to the S&P. It's been underperforming the S&P. So I want to see it start to outperform the S&P. So we talked about in our opening segment about how the stock market is making all-time highs. And Thomas, I just can't think, or I don't see how we can make all-time highs without Warren Buffett or Warren Buffett stocks. So if you go into our investment page under Warren Buffett stocks, look at some of these companies, right? I mean, are we saying that the market is going to go higher without Apple and Amazon and American Express? Bank of America. I mean, these are just a few in the first, 5 or 6. I mean, there's a lot of great companies. There's a lot of companies here that represents the health and strength of the U.S. economy. So I don't see how we can get to new all-time highs without bringing Warren with us. So, something I'm going to be watching. Now, I'm just going to give you a little bit of a little bonus here. You guys remember on opening day in baseball, we looked at the Braves, and I said to you that there was this seasonality with the Braves, that it tends to bottom near April and then it rallies all the way until August. And I was like talking to you, I wouldn't be surprised if this gets to $45 by the time we get to August. And yeah, Braves started out slow, but the stock has done pretty decent. So I just saw that, just setting this up, Thomas. I just thought that was funny. You remember that when we talked about that?
Yeah, absolutely. Absolutely. You know what's interesting about this one, John? I've mentioned it a few times. I've never understood why Berkshire Hathaway is included in the S&P 500, because it's basically like an index of an index, some slight variations. But, it's like double counting some of these names. I mean, Apple is still the biggest position in Warren Buffett's portfolio. Apple is a huge component of the S&P 500 already. So it's like these stocks are just getting double counted in the index. It just doesn't make any sense to me.
It certainly is like a quasi ETF, right?
Yeah, absolutely.
But it doesn't make sense to us as if the overall broader index is making all-time highs. And like you said, double counting, this is basically just a fractional proportion of the S&P. What's going on here? There's something weird, right? There's something that's going on. Now, maybe this is about old school economies versus new school, technology. Maybe and maybe this is also, an indictment of what the S&P represents. Maybe it doesn't really represent the broader market because it's so cap weighted into like just a few stocks. So maybe that's something we could talk about.
Yeah, later. And I think it shows what a drag Apple has been, right? I mean, it's more than 20% of Berkshire Hathaway's portfolio, and it hasn't done anything, and still the S&P 500 just keeps marching higher and higher. Imagine if Apple turns around, John, and they get their act together, then what's the index going to do?
Right. Actually, the two of them, Apple and Amazon, right?
Absolutely.
Right.
All right, John. So we're going to get to, I think, what is my favorite discussion of the show, and it's about Google and Tesla. And I just want to come out right off the bat here, John. These are two of my largest positions. I like them both. I like them for different reasons. But before I share my thoughts, John, on which one I like better, I want to get your thoughts. Which one?
Oh, I got to go first. Huh? You're the challenger, and I got to go first.
You got to go first. Show us what you got.
So, okay. You put me on the test. There we go. Thank you. All right. First of all, I think they're both great companies, right? And let's talk about Tesla. So, again, I'm not knocking Tesla here. I think the man is a visionary, and I think his leadership, he makes things happen. Are we talking about a modern day Einstein or a real Tesla? Maybe, I don't know. I mean, history will tell us that. But I don't trust his execution, let's say, or lack of execution. He's talked about things in the past, Cybertrucks. How long did Cybertrucks take? Robotics or robots, right? He's been telling us we're going to have robots in our homes for like last 5 years. Matter of fact, in his corporate earnings this week, he claimed that that he thinks that in 5 years they're going to be making 100,000 robots, and that they're going to sell over 1 million robots a year. And the other claim that he made was in terms of autonomous vehicles or ride sharing. He said that he thinks that by the end of this year that half the population in the U.S. will have access to, a Tesla vehicle. But, he hasn't even put in a permit to test or even operate in the state of California, which I think would probably be his largest market. So I think there's a lot of exuberance, but lack of follow through. Not doesn't do it. It just takes him a little bit longer. One technical advantage I do believe that he has is batteries, and we've talked about behind the meter solar and wind. But again, that's a very difficult space, and he has a lot of competition. So let's talk about Google. All right. So Google, for months now, folks have been saying they've been fearing that Google is losing the search engine battle because AI is taking over. But again, in their corporate earnings this last period, they said that searches are up 12%. And that they made $54 billion. Let me say that again, $54 billion from their search engine in one quarter. Now, history has shown that Google is very defensive. They're quick to react. Remember when data went mobile, they merged or they married with Apple to make Apple their, Google their search engine. Remember when Microsoft, Bing was going to be the new thing, and I don't even know if anybody uses Bing, or even is Bing still around? I don't know. And then they're sitting on a pile of cash. They're spending $85 billion a year on capex, and they're saying that they're going to spend much more next year. So all of those things are positive to me. Also I think that Google is undervalued, and I think the sum of the parts are worth a lot more than the current share price. And I know there's a fear of a DOG breakup, and I think that would be a headlines bad for the stock. But I think ultimately, I think that would be good for unlocking shareholder value. Very similar to what happened with GE. And so my last argument here, Thomas, is if history, in past performance, there's no guarantee of future results. But if history does repeat, if you bought Tesla in January of 2021, you were up $21 or 7%. Oh, good job. But if you bought Google in January of 2021, you're up 114%, or about $103. So my case is I like Google because they're consistent, they're performing. Trends, my friend. They got a ton of cash, and I think they're a lot more worth more broken up than they are whole.
Yeah, early in the show, John, I brought up the idea of timing, how important timing is. And I'm going to just reiterate that for this case, because I like both of these stocks, but I like them for different time frames. If you ask me which is my favorite for the next 1 to 2 years, 100% unequivocal Google. I believe Google has the most potential over the next 1 to 2 years. What I'm going to do with Tesla, John, is I'm going to continue to build my position on weakness, because I do strongly believe that over the next 10 to 15 years, Tesla is going to really reshape the idea of transportation in this country. I think they're going to have a huge role in AI, robotics. I'm a huge believer in Elon. I think he's going to steer the ship in the right direction, even though it looks a bit shaky today. So Tesla is a huge bet of mine for the next 10 to 15 years. Google over the next 2 years.
Well, take it as that is, right, Thomas? Take it as it is.
Absolutely. And of course, reiterate, guys, not financial advice, just my opinion. So don't go out there aping into Tesla just because I said so.
And advice is what you're worth, what you pay for it, right?
Exactly. John, before we get to the Q&A, I saw something earlier today, and I almost couldn't believe it. I actually thought this was published on April 1st because it sounded like a joke. And then I realized it wasn't. It was published today. And then I thought, okay, is this from The Onion? No, it's not. This is a legit story, guys. So obviously we're $37 trillion in debt now, guys. If you want to help pay down the debt, you now have the opportunity to do so. You can send the government money via PayPal or Venmo and fulfill your patriotic duty to help pay down that debt. John, I don't know if this is an opportunity you're going to pursue, John, but
well, you're the one who's making all the money on ETH, so why don't you send them some money, right?
I think I'm gonna hold on to my Bitcoin and my ETH for now, John. I don't think this opportunity is going anywhere, so I will keep it for a rainy day. But I'm gonna hold off for now, John.
All right, brother. I appreciate that.
Matt in our audience, he says he's not going to pursue this opportunity. Understood, Matt. Understood. All right. John, let's get to some Q&A here. All right, this is a good question because we actually discussed this, John, as maybe an idea for the week. But Eddie wants to know what's up with the healthcare sector.
Yeah, so I have a lot of other screeners that I use, and we actually, I wish I had my notes on that. We actually talked about this one. So I think there's a lot going on. I think there's this kind of this rotation out of tech. Tech has really been leading the way, but that there could be, because healthcare has been so downtrodden, again, that theme, that there might be some opportunities as fund managers start to take some profit out of tech and start moving into some of these beaten down sectors. Now, a lot of my screeners in some of my other screeners that I use have been generating a lot of buy signals, but if we go into that sector, and I'll do this real quickly, it's not in the big pharma, but it's in the medical devices, the products. Let's sort this by 1 month gains, right? Biomed, right? There's a lot of advances are being made with AI and medical instruments. And this is part of that demographic that older Americans are willing to pay for cosmetic surgery or, improvements. And so look at some of these stocks that are in this space that are in like one-time surgical uses or tools or, Stryker. Think about Stryker. Every one of my friends has either had a new shoulder or a knee. So that's where I'll be looking for the opportunities, not necessarily in the pharma, but if the passive money comes into this sector, well, then big pharma is going to benefit from that as well.
John, we got a question on a stock called Dow. Now, this is not a stock you and I talk a lot about, but I believe it's a material stock, and materials was sort of an area you were talking about, John. Any thoughts on that one?
Yeah, I believe it's Dow Chemical, right? Isn't that what it is?
Dow Chemical. Yep.
Yeah. So again, this is part of that story. Now, I don't know what happened today. It looks like they had their earnings come out, and it's funny. Maybe we can look in my. It hasn't been in an uptrend, so that's curious. But boy, it had a precipitous drop today. So I don't know what you want me to talk about here, except that if I was looking at it as an investor, the stock is in a serious down trend. Just had a big gap down. Obviously, that was off of earnings. Is it a value play? Turnaround story. I don't know. That would be something we'd have to do some investigating. From a technical standpoint, yeah, it is outside the Bollinger Bands, but the bands are turning out. That's usually a sign that this directional movement is going to continue. But don't be surprised if this, in the short run, it might snap back a little bit. So.
Yeah, and again, not Dow specific, but material stocks, John. Last week they saw a record inflow. Over $6 billion flowed into materials ETFs, material stocks. So that could be an area to watch. Again, whether Dow participates in that, who knows? But it could be part of that group.
Yeah, materials have been one of the stronger sectors. And remember, we talked about market cycles, and that was one of the ones, materials and industrials is where we wanted to look for some opportunities. And some of those stocks have done very, very well as of recent, right? I mean, I can pull up. Go ahead, ask the next question while I pull up those stocks in there, and we can see who the top performers are.
Yeah, there was a question on a stock. It's called Trade Desk, John, TTD. I don't know if that's one you watch. I pulled up the chart. The chart. The question was specifically about a potential gap fill. So it had a huge gap down, and it looks like it's trying to claw its way back. So the question is, do you think that gap might get filled?
I love gap fill trades, right? I mean, I definitely think that it's a trade, but you got to remember, a gap fill trade doesn't necessarily mean it's going to be a buy. Now, you said there's a gap down. There's a huge gap down, or no?
Pull up the 1 year chart there, John.
Oh, okay. I see what you're saying. Okay. So in this case, yeah, I mean, to me, that just visually here, you are above this gap, so you're probably in the no man land. But again, yeah, you could ride this momentum up, and that is a $40 ride there. But if it got into the gap and then got up to here, then I would be more likely to be a seller. But yeah, this certainly could be based on gap theory. Again, I don't know. Did we close there? No, we're not. We're not really technically in the gap here. So what I would look for on this one is, a close above these highs. And then I would use my ATR theory, which is, let's use 1.5, 2 times your average true range. So that's like 280. So let's just round it up and say, $5. And so again, if we go back to the chart, I would need to see this stock get above $5 above this high, whatever that is, $84, $85. So I need to get it above $90 for me to feel like this would be more comfortable. This would be one of those momentum gap fill trades.
John, we had a question if you had any takeaways from earnings season so far, and that's a good question, because I was also kind of taken aback at the fact that we had these big companies early in the week report earnings, and it looked like the numbers were okay, but then the stocks were being sold off by the market. And, do you have any takeaways from that sort of price action?
Yeah, it's been kind of mixed bag, hasn't it? Right? Earnings, some stocks have done well and their stocks have done well, and some stock companies have done well and their stocks have not done well. But you got to remember, we got to come back up a couple quarters as we came into this, looking forward to this quarter, that a lot of firms were saying that, hey, they thought that their earnings were going to be affected by tariffs. So their guidance for this quarter was a lot lower based on the idea that we were going to have tariffs. Well, we never got those tariffs, or that they've been slow to be installed. And so this is one of the tricks that Wall Street does is they underestimate and they overperform, right? That's kind of their MO. But what they did is as they were delaying the tariffs, they say, oh, well, things aren't so bad. And then now they're giving, for third and fourth quarter, they're saying, hey, our performance is going to be a little bit better. And this is one of the concerns I have is that their guidance now is like, oh, well, things are changing again, right? And there's uncertainty. So, the next quarter, I think, is the one that is really the one that's going to start giving us a better direction of what's really going on with these companies in terms of their earnings. Are tariffs and trade tensions affecting their margins? And now will expectations and projections fall in line with what we're seeing actually happening in the real world? So that's kind of my takeaway on earnings right now.
Question on defense, John. I guess the question is there hasn't been much movement since the big beautiful bill was signed, and there's a lot of defense spending allocated there. So how do you explain that sort of dichotomy, John?
Well, remember, the market always looks forward. What's that ETF that you like? I know the one I was always looking at is a missile. ITA, right?
Yeah, U.S. Aerospace and Defense. Yeah.
Yeah. Again, let's look at those constituents in there. So, the market is always looking forward. So, I mean, the bill passed just a few weeks ago, but the market is always like 18 months ahead of itself. So, the market is already priced in probably what happened in the bill. That's the old, buy the rumor, sell the news. But let's look at our constituents in this one. I still think in the long run, you're going to see these companies fare well. GE, Aerospace, Raytheon, Boeing, they're all part of it. I would also think about diversifying if this is a space that you're interested in, is not necessarily just here in the U.S., but start looking at some European defense contractors, because it seems like a lot of their budgets are talking about a lot more defense spending than U.S. And again, around the world, there's this idea that American exceptionalism has waned and that a lot of these countries are looking to buy goods and services from other countries. So I think those type of defense stocks, and I don't know any of them right offhand. I know there's, a few of them in Germany. I would be looking at some of those as well.
John, we got a question on whether you see a cup and handle formation for Bitcoin starting at the end of May.
Bitcoin. All right. Well, let's go and see that. Since May, huh?
I don't think I'm seeing it, but
yeah, I can see that. Yeah. See there's your cup, right? This is what we want to see, right? We want to see, there's kind of this slow grind back up. You have a lid, right? You have, a level of resistance for the market, and then you have this, this kind of this basing action, right? Typically it's about 6 to 50 weeks to make the cup, and it's about 1 to 4 weeks to make the handle. So, it fits that mode. Now it has broken out again. What I would do is look at my ATR and look at for a confirmational. But when you watch that webinar on Wednesday that we did on patterns, this has a high probability of what we call a drawback. In other words, the price will come back to the breakout. So this is not a one-way kind of trade or pattern. So I'll be looking for, if you believe in this pattern, then I'd be looking for some kind of a little bit of a drawback close to, the top of the lid.
Let's see, from Alan, airlines. Nobody talks about Copa Airlines. They say the best airlines are United Airlines, but Copa outperforms. John, I don't know if Copa is something you look at, but any thoughts on airlines in general? Is that an industry?
Yeah, no pun intended. Copa is not on my radar, but again, there's something dynamically that's going on in the airline industry. Again, folks that can afford to fly, or older folks, that are want experiences. What I did see in some of the numbers, like from Delta and United, is there's a lot less European traffic, us going them and them coming here, but domestic traffic is certainly up among the high end patrons. So those look good. I don't know what Copa is if it's a local carrier or a discount carrier, but it seems like the strength in the airline is from those high end folks, but it does seem like the numbers are stronger on domestic. So maybe if Copa is a domestic carrier, then that might benefit from that.
John, is there a sector that you're particularly bullish on for the remainder of the year?
Yeah, you said I'm very bullish on the material sector because of the stocks there. We did Freeport McMoran just a couple of weeks ago. That's in that sector, but there's a lot of chemical companies, right? I mean, if you believe in the market, the economy is going to get stronger, that we're getting these tax cuts and things, and the tariffs, it's going to be yesterday's news, then that's where you're going to start seeing some movement in those stocks. That's why, again, the Warren Buffett story is right. I mean, maybe a Coca-Cola is not a material stock, but the idea that if the economy starts to move, that these are the companies that I want to look at. Now, after materials and industrials, you could start thinking about energies. And I still do believe energies have been an underperformer compared to the greater S&P. But we've talked about AI and the demand for energy, and I think this is going to be a multi-year expansion in the energy space. And I even said to you that, maybe they've gotten a little bit ahead of themselves, some of these utilities, but I would never have thought myself sitting in at this time saying, hey, utilities is a growth space right now. So, I would be looking at those ones as well.
We got a question. Where can you watch the chart pattern webinar that you did from Wednesday? So there's two places. You can go to our YouTube channel. It'll be the very first video that you see there. We also upload all of those videos to our website. So you can go to the webinars page and then it'll be the first one that pops up.
Yeah. Go to under learn on archive webinars and there it is right there. And if you were talking about trends, again, we were talking about some mega trends in a couple of our questions here. That one was where we talked about that healthcare space.
Is there a concern that because of AI, eventually GDP of the country would come down? I actually think it's the opposite. I think AI, the whole idea behind AI is that it's going to make the country more productive, right? Resulting in further growth. Some people even say that AI is the key to resolving our debt issue in the future. I don't know if that's true or not, but that's what I'm hearing. John, what do you think?
Yeah, I mean, I think the verdict is still out on this one. I agree with you. I think AI is definitely making people more productive. And, you read a lot of companies that are laying employees off because they can do things with AI. So all of that, that labor cost falls directly to their bottom line. So I think that's good for the market overall. But I do see this kind of the other side of the coin is like, if you start laying a lot of folks off or out of jobs, well, who's going to be paying the taxes, right? Who's going to be generating the revenue for not only the federal government, but state and local governments? So that could be the GDP story that this question asks. So, yeah, I think there is a potential that it could have a negative effect on the GDP. But I'm kind of in your camp that I just feel that the productivity will probably outweigh that negative impact.
Yep. Good stuff there, John. All right, guys, we've been going for about 50 minutes, so I think it's a good time to wrap it up. Just a reminder, guys, we are going to be off next week, so then we will be back on August 1st, I believe, John.
Is that what the date is?
Oh, no, it's August 8th. August 8th, guys. Next Friday is August 1st, so we're off then, and we'll be back on August 8th.
August 8th, yep. Okay. Thomas, great stuff this week. I know we had a lot of subjects we wanted to talk about. I hope you guys enjoyed the ones that Thomas and I picked. And again, I want to just go back to that meme stock. Again, that's tongue-in-cheek, but, I just wondered how the strength of social media can, push some of these stocks around. Anyways, thanks for being with us. If you're watching on one of these social media channels, give us a thumbs up. We appreciate that. I know Thomas does appreciate that. Until next time, best of health, manage your risk, and the good of all trading.